Hello and welcome to yet another edition of Captains of Industry. I'm pretty excited for this one today, but let's get straight into the context. Now, as different economies work out ways to reduce inequalities and reduce gaps, welfare gaps within the different economies, we're trying to understand what countries in East Africa are working with. Investment vehicles have been targeted as some of the ways that we can pick up the pace collectively, and investment trusts in particular are what we'll be focusing on. Here in Rwanda, we have the National Investment Trust. We know the Iterambere Fund is a term that we are quite familiar with. We've showcased it more than a few times on the channel. So we'll be getting into the designing of that and what exactly came out of it and how the team has been working towards ensuring that we have financial inclusion and targeted development within different segments of the market. Joining us now to break this all down is the technical advisor at the Rwanda National Investment Trust, Anagha Hunnurkar. And before we see her, we'll be getting into elements of the trust. But before that, a bit of a personal life, as we normally do for Captains of Industry. Anagha, glad to have you speaking to us. Finally, we get to speak on matters that combine both business and personal matters. We talked about this before, where you mentioned in your earlier years you used to watch CNBC and you always followed business matters. But guide us through your early life and how you transitioned from watching CNBC to actually being on CNBC.
Thank you, George. Basically, let me take you back to my childhood. In my childhood days, especially the women, the girls in the family were, especially those affluent families, they were not nurtured for going into business one day, but they were nurtured for making a family tomorrow, so that a person from an affluent family would want an educated wife so that she can look after the children well, look after the house well. And so that's how our childhood was. It was just that we have to study well so that one day we get married into a nice family. That was the limited way in which things were happening those days. So, and even when I entered commerce, my first degree is BCom. Even when I entered commerce, it was all Greek and Latin to me, because that was never our exposure at all. So one of the ways that we educated ourselves, because just the textbook does not give you a full view of what you are wanting to write. And as a academician, you write something, but if you give some practical approaches to it, you additionally get some marks. Okay. So that was what actually made me attract to CNBC or to the Economic Times, for that matter. Economic Times is one more very leading paper in India for business. And it was more to do with getting those marks rather than learning something new, because as I told you, our focus was finally to be a housewife in somebody's house. Right. Later on, as as they say, it is the design, the ultimate design of the Lord. Right. Later on, my father used to type my CVs and ask me to sign, saying that you seek employment. I used to look at my father. Why is he asking me to go out of the house for job? We don't have enough money? I used to ask my mother. Don't we have enough, and such things. So my mother used to say, no, you should have that exposure also. You should understand what a working woman is. And this was all new to me that time. So if today I'm in Rwanda, it is all because of the efforts of my parents and the design of God, rather than my own. My effort was, yes, I studied well. I studied intelligently. I did not, let that grip go out of. But beyond that, whatever has happened in my life, much goes to my parents, right, my upbringing, my parents' desire. We are three girls. Oh, right. I don't have a brother. Okay. So my parents wanted us to be as equal to boys and not be thinking that I'm a girl, so I shouldn't do this. So that is how I was pushed into working woman.
All right. Now, of course, the Indian environment is very vibrant and very advanced in different aspects than other countries. Would like to know, how exactly did you go from there to Rwanda? Not only Africa, but to Rwanda in particular.
Okay. Again, as I say, everything happens by design. When I was in India, I was working for a company called Unit Trust of India. Now that Unit Trust of India was the first mutual fund of the country, which was formed in 1964. By the time I was recruited, it was 1986 that I was recruited. And one thing about Unit Trust of India is it was like a university. It was not like an office place. It was like a university. Our bosses were not bosses, they were our mentors. They used to really do hand holding and hone our skills sort of to make us take the upper challenge. And there was one more policy in UTI that if you were studying for any other degrees, they used to fund you for it. I mean, the fees were paid by UTI. So that was one more attraction that made me, take a lot of professional degrees while I was in UTI. So, it was, as it is, I love academics, to tell you frankly. So studying at somebody else's cost was an added attraction. And it used to also add to our increments. So it was very mundane the way I was trying to, get my professional qualifications, and all the purposes were very mundane at that time. But later on, by these professional qualifications, it opened doors for me which were unknown to me. Like, at one time, UTI made me the fund manager. And in those days, I used to manage funds worth 5,500 crores, which is almost 1.3 billion USD in today's terms. So that's the sort of exposure that I started getting out of my professional qualifications. So that's how we grew at UTI. And in UTI, we had something like morning meetings, which were compulsory for everybody. And those morning meetings, especially after I became a fund manager, those morning meetings were a sort of a glimpse of what's happening in India on a daily basis. And so, like, what we talk about, quick messages. Like, there used to be an analyst, an equity analyst, debt analyst, who used to sort of give what is happening in the equity markets, what's happening in the debt markets. There used to be an economist who will tell us about the economic. So as fund managers, there was a wealth of information that we were getting at 9 in the morning before the market started. Our market started at around 9:30 and they were there till 3:30 those days. So before the market starts, we knew what we are going to do for the day. And as I told you, it was a university, so we used to have a lot of interactions with whether it is journalists, whether it is industry people, whether it is visiting company visits. And that's how, slowly, we got the rules of the game sort of, and we developed ourselves. Now before I came to Rwanda, actually I was even technical advisor at Unit Trust of Tanzania. How did I get that job? Is again, they had advertised in Economic Times, and as I told you, Economic Times is like our Bible there. So they had advertised there, and they had just mentioned East Africa. So I didn't know which this company was and what, but I applied. And one fine day they called me for interview, and the rest is history. I was in Tanzania for 5 years, and after that I went back, and then I now came to Rwanda again as a technical advisor, doing almost the same job that I have been doing before. But Rwanda, one thing which I must tell you is that Rwanda was something unknown for us in India. And I was wondering now, should I go, should I not go? I was in two minds. My husband told me very clearly, see, they're giving you a return ticket. You're going with one bag. If you don't like it, you can always return. But why are you not taking up the challenge? When somebody is giving you a challenge, take it. Right. So that's how, our family has been supporting me in ways, in discreet ways, but making me, go ahead, urge on to go ahead. So one is my internal thing to take challenges, but other thing is the supporting environment that you require to take that challenge.
Right. And how many years have you been in Rwanda?
Now I've been almost 3 years.
Close
to 3 years.
Sizable enough. Now, so that's a perfect segue, because you've told us about the genesis, even with your background with the designing a fund. And that was one of the elements that we missed within the Rwandan context. Investment vehicles were available, but investment trusts or investment funds were still not as targeted to the market, or we still didn't have the understanding of it. So coming now to the Iterambere Fund, we're particularly curious about how your team came about designing that concept.
Sure. First of all, we must understand that capital market development, to have a holistic capital market development, you must have a stock exchange, And after you have a stock exchange and you have other pension and insurance and bankers and all these other institutional setup, it is also important that CIS should come into place, because CIS is that vehicle that connects the grassroots to the capital market. So collective investment scheme is the vehicle, because see, in case of a bank, when you go and do a deposit, what you're getting is some certain rate at which you're doing it. When you go to a stock exchange, even if you're buying shares, the thing is, do you have the wherewithal of understanding how to choose a share? You know, it is not something like, you know, many a times what happens is people just subscribe to the IPO and just sell it off after the listing. That's not what is stock investing. Stock investing is something for the long term. And you need a vehicle which is giving you that professional touch. At this, because you know, for people who don't understand the stock markets, doing an IPO subscription and selling it off in 3 months is easy job.
Right.
But holding it for 5 years, holding it for 10 years, or holding it for 3 years, or should I not hold it at all, is a decision which they are not able to make because they don't have the understanding of the stock markets. So this is where actually a closed-end scheme comes into picture, where it exposes the people to assets like treasury bills, treasury bonds, money market instruments, stock markets, in a nutshell. Like, you know, it is like having a diversified portfolio. Like for example, Iterambere fund, the way we designed it as a balance fund. Why balance fund? So that you have a diversified portfolio, a one-stop shop at the same time. You don't need to separately invest in each of these instruments to get a return. That is the idea behind designing that product. And product design also has in itself some of the features of the ease of the investor. How easy it is for the investor to invest in that particular vehicle. Like if it is a large sum, like for example a CP, or commercial paper for example, the minimum subscription is suppose 25 million. How many of the individuals can subscribe to it? Yeah. So even for that matter, you know, other vehicles like RSC or other vehicles, the minimum is 100,000. What we did is we brought it as low as 2,000. The reason being the ease, that even somebody who is a tomato seller, if he is ready to save some money, he should be able to invest into the capital market. You know, even opening bank accounts is sometimes difficult for people. So when opening of bank account is difficult, do we have something on offer which is much easier than even opening a bank account, where you can save for the long term? But our pitch has always been to save for the long term. We are not a speculative product at all.
Now, given that particular point, you mentioned at least the lowest point was 2,000 francs, right? And during the IPO, the unfortunate bit was that the minimum initial investment amount, the gap within that between 2,000 or 3,000 and 100,000, we still saw the larger population that was taking up the fund was still people who were advanced in literacy levels, or they understood what the fund would do for them. So even if the price was low, the lower market segment still did not participate as much. Maybe you can guide us through that and how the IPO performed.
You know, see, what I would say is like this. See, in case of an institution, any institutional fund, what happens is institutions do come in a large way to invest. But the numbers, you know, we have to also see how distributed, how well distributed is it, the fund is between institutions and retail. Like if you ask about Iterambere fund, about more than 2,000 investors we have, about 30 institutions are there. Yes, I agree that 30 institutions, the share of 30 institutions is maybe 55 or more than 65%. The rest 35% is across the balanced 1970 investors that we talk about. But those 1970 are those who have come with 2,000, 3,000, 5,000, and main thing is they are earning, they are saving every month, you know. So if you add up to millions, it is difficult. I mean, in terms of, you know, there are two successes that we have to see. One is in terms of AUM, how much is the asset size. One is in terms of numbers, how many people have been, you know, been able to be empowered through this vehicle. So the first year itself, if we have got 2,000 people, it is because somewhere there has been an awareness about that saving is necessary for tomorrow. But that awareness has not come in a big way. But I would also say this, see, Rwanda is on a development path. So when it is on a development path, it is automatic that jobs will be created. It is automatic that when jobs are created, people will have incomes. It is automatic that, you know, initially a hungry man will eat all the food, but later on there will be some food left on the plate, as, you know, you say Maslow's law, or you can say marginal utility, whatever. Now these extra incomes that are generated, if there is no savings vehicle at all, where would they save? Where would they invest? You know, banks is the core business of banks is lending. The core business of banks is not investment vehicle. The core business of insurance is hedging of risk. It is not investment. So where is that investment vehicle ready? That platform we have created right now. You know, at one time railroads, when the tracks were being laid, people would doubt that when there is so much of horse carriages around, who is going to go by railways? But today, where are the horse carriages?
Obsolete.
Yeah.
Right. Since I'm curious about what the next stage is for the fund, we'd like first to hear how the IPO performed and what you think was the largest impediment to it outperforming its performance, which was already exemplary.
Okay. So, George, let me tell you, the fund has earned a very good return. It has earned a 9.62% return during the maiden year of its performance. And the assets under management also have grown up by 38%. So, you know, 38% growth and a return of 9.62% is something which, you know, when you ask me in the IPO why people didn't come in a large way, is because where was the track record? Arnett was a new company. Although it was established by the government, still it was a new company. The fund was new, and you know that the fund is not allowed to assure returns as per the CIS law. So the fund is new, there is no track record, the company itself is new, and as we build the track record, even today we know that after knowing that this is the sort of the return that the fund has generated, we know the amount of interest that has now gone up. Now one thing is, you know, theoretically understanding the concept, theoretically having the interest, and actually taking out money and putting it. It will take time. But once it starts, you know, it will be really, you know, I have seen how UTI has grown. The Unit Trust of India that I talk about, my mother company, as you can call it, because I was nurtured over there. You know, I have seen how it has grown. There were queues. There were long queues. You know, one of the fund called Master Game, in Calcutta office, before the trucks even could, the trucks of application form, before they could enter the office, they were ransacked because people wanted forms. So that's the growth that we have seen. And Rwanda, see, if it is a developing economy, Rwanda has a track record of more than 10 years, 2003 to today, 7 to 8% GDP. World will have to look at Rwanda. Will look at, because see, if you look at global fund managers, what do they want? They want a return. And obviously capital flows where the, money flows where the growth is. So maybe, you know, today we are wondering why, what if such things today. But that day is not too far, and when it happens so fast and so quick that everybody is left wondering, oh, did I miss the bus?
Right, exactly. So brings me now to the point, towards the end of last year, the Minister of Finance mentioned that they were getting onto a long-term savings scheme, the LTSS, right? So how high up within national policy or advice on the same is Arnett? They need to advise heavily.
Yeah. That's a very good question, but before that, let me tell you, LTSS is very necessary. Why it is necessary is because if you go to see the RSSB, which is the social security company for social security, is for the formal sector, and just 10% is covered by the formal sector. The 90% is uncovered. So it was very necessary, and it's a very good step, very good policy measure, that LTSS now can cover anybody and everybody. And the way they have linked it, you must be knowing some of the features. The way they have linked it to Budehe, you know, yes. Category 1, 2, 3, 4 based on the poverty, how the subsidy is going to work. It is one of the best products that has been designed. Now, what is Arnet's role in that? Arnet, you know, is not just a company which is launching closed-end schemes or collective investment scheme. Arnet is also an investment manager. It has an investment manager license both with CMA as well as BNR. So we qualify to be one of the fund managers for LTSS. And that is where we look at ourselves collaborating with.
Speak to us now as we move to the tail end of the interview. What the fund is doing and what the company is doing is ensuring that we have inclusive social development. You have the business growing people's wealth, but you're still trying to reduce inequalities and improve people's welfare. Yeah. Guide us through the holistic approach.
Yeah. You know, one thing about Rwanda, you know, I'm passionately in love with your country. Let me tell you that. Why? Because the way the business, like let us say Rwanda, a country, as a business model, for example, the business model, like it is, you know, one of the easiest place to do business, where, you know, in 6 hours you can register the company. But 6 hours registration means nothing if there is no other growth happening. Look at the electricity, you know, each and every, including rural electrification, is being done. Fiber optic cable is being laid. Wi-Fi, broadband is happening. Tourism, even tourism, which is the highest income earner, tourism is not looked at as just, you know, you go and see the gorillas. No, it is an inclusive growth where even the community is involved, so that now community looks at gorillas not as a poaching target, but as a national wealth.
Right.
You know, that transformation from poaching to national wealth is a very big cultural transformation. So whether it is through ICT, for example, ICT, 1 laptop, 1 child. So, I mean, per child. So even at that level, they want the growth to go to sectors, and it is cross-cutting across everything, whether it is health, whether it is taking out people from poverty. I mean, all those MDGs that you call it, every goal is being met with a holistic approach. And with this also, it is tradition that is tied to it. Like whether it is Muganda, where, you know, communities meet once in a month, every month, for doing social enterprise, whether it is Eterero, where, you know, it is civic patriotism, as you call it, whether it is Imi Hugo is something very important and very new. I think I have not seen this in whatever. Right. Yeah, Imi Hugo is accountability even at the cell level. Right. Even at the smallest level, there is accountability. There is performance monitoring and evaluation. So Imi Hugo is accountability right from the smallest cell to up to the president. That is something very unique, you know. Jirika, you know, 1 cow per family. You know, cow is seen as a wealth. And, you know, remember, I mean, why I am more amazed about Rwanda is this is like a phoenix from the ashes. You know, it has risen so high up through where there was nothing. You know, it was only despair. And it was only no hope maybe of what is going to happen to us tomorrow. And from that place to fly like a phoenix is, you know, it is this tripod, I will call it.
Right.
It is not just business, it is business with holistic growth and drawing from the traditions, positive things from the traditions. That has made Rwanda unique. I mean, if we want to replicate it somewhere else, I think it is so difficult. Another thing, zero tolerance to corruption. Right. Very unique. I mean, to know, yes, I understand that human psychology and all those things are involved in it, and it is not easy, but even to make a statement that the country stands against corruption is a very big statement, and especially when it is Africa.
Thank you very much. We really do appreciate you creating time. We had an interesting half an hour trying to understand both the business, the Rwanda National Investment Trust, and Anagha Hunnurkar, technical advisor at the body. Now, we've got in context of what exactly drives her and her passion towards this wealth creation and still inclusive development. So we've heard over the last half hour how the fund came to be, the pricing index and designing and research around the same. So we only know that the numbers could go higher from here, both in terms of ensuring that the general population in Rwanda gets the fair share of knowledge and they get the fair share of inclusive growth. Many thanks for watching. I've been your host, George Ndarango, right here on CNBC Africa, first in business worldwide.